Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. Today was more of a consolidation day in the currencies. We saw the dollar index jump up just a bit. Not a whole lot of reasoning behind it. The data wasn't anything to write home about. Factory orders came in soft. In fact, Fed Chair Powell, at his congressional testimony, talked about the Fed being prepared to end the balance sheet unwind this year. So if anything, you would have imagined to see the dollar a little weaker. But what we did see today, more so, was in the Treasury market. We saw a lot of weakness in the Treasuries as yields jumped up. Now this could be a little bit attributed to the fact of a roll from March into the June contract. On top of that, we did see stable data coming out of Europe. You have a Brexit can getting kicked down the road, but some stable confidence data out of Europe. And confidence data for the past, say, year basically since last spring has been absolutely awful out of Europe in general, and it's still bad, but it's taking a turn for the better, and that has helped lift those German Bund yields, and then that's carried in here to today. And with that, the more surprising factor is you're not seeing the euro really extend gains, but it has had a solid week. So again, it's more of a consolidation day to try and explain that. The euro is holding out above, or still holding on a closing basis, that major 3-star resistance that it did close above yesterday. Not in a very fancy fashion, but it's fallen back into there, and it's left a little bit of a tail in the follow through. So keep a close eye on this and making sure that it continues to close out above major 3-star resistance if you're going to stay long on that trade. Now moving on to the yen took a massive hit today, and a lot of that comes from the move in Treasury yields. Safe haven assets in general took a hit today. Gold was down. So the yen is right back to where it was on Monday's close, right near that 90 level and right near that 200-day on the continuous, 200-day moving average on the continuous chart. Overall, though, that's just another fail at first key resistance 90.90. In front of that, so tonight we looked at industrial production, retail sales coming out of Japan, but more importantly, maybe look at the Chinese manufacturing number, and that's going to give you some pulse on the risk sentiment. Overall, China came out of the gate to start this week with those U.S. and China trade talks and potential deal, and with that, the Chinese Shanghai Composite was up 5% on Monday, but this manufacturing number is going to be key. Robert Lighthouser, the U.S. Trade Representative, he also had a congressional testimony today, and he would allude to the U.S. and China not being as close as some of the headlines pointed to on Sunday. This is no surprise to us, but that could also give you another reason to think potentially the dollar did have a little bit of a bid today on things, as the dollar is really the safe haven on that U.S. and China trade. So again, look at the yen, look at it at a key level here today, and some data coming out of Japan and China. That Chinese manufacturer is also going to be key for the Aussie dollar. The Aussie dollar is down sharply after a poor construction work number last night, and the Aussie as well has struggled. Now we did talk about that Aussie against some strong resistance. It's instilled a consolidatory pattern. No real breakout either way, but any headlines on the U.S. and China trade are going to be key, as well as the manufacturing number, and then we got some more data coming out of Australia tonight. So keep an eye on that. And then for the Canadian dollar, it definitely benefited from crude oil yesterday and again today. CPI was somewhat soft. Canadian finished in the green. It still has overhead major 3-star resistance, but a move and a close out above that 3-star resistance would really invite buying to the table. So we're more cautious on the Canadian until it can do that. We have PPI numbers coming out of Canada tomorrow, and again, a big slew of data from starting with Europe in the morning. You have regional CPI numbers, and then coming into the U.S., you do have the GDP Q4 that everybody's been waiting for, and you have Vice Chair Clarida speaking. So things are going to move all on that. Give us a call. We're here to help. We're here to talk about anything on the board. 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates, and you can sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss. It is not suitable for all investors. Thank you.